Good morning, everyone. I'm Vince Lancy, and running a little bit late with a lot of ground to cover, unfortunately, or as usual, I should say. So let's start with the markets. There's our home page. No, there's our home page. The dollar is up two at four. I'm sorry, 10-year yields. Wow. Let's start over. Here we go. Good morning. I'm Vince Lancy. Hope everyone had a good holiday. A lot of ground to cover, and I'm running a little behind schedule, so let's get to it. 10-year yields are 420 up two. The dollar is 106.37 up 59. Wow. S&P 500 is 60.34 down two. The VIX is 13.96 up 46. Gold is 26.39 down 10 near the lows of the evening. The silver market is 30.37 down 22. Copper is 407 down two. WTI 69.07 up 75. Natural gas is 294 down 17. Bitcoin is down 2,200, 95,000. Ethereum 35.96 down 116. Palladium down $1. Platinum down $2. Grains all down between 30 and 90 basis points. Okay, American Exceptionalism, Crossroads, Hartnett, Macro, and Oliver Technicals. That's a mouthful. In summary of that title, Hartnett put out his end of the year analysis, which painted the world in a very simple two-scenario situation as a response to Trump's tariffs. And I presented that, and we sent it out. Part two is going out this morning. And then last night, Michael Oliver's technical report came out, and he painted the chart situation as reflecting one of Hartnett's two scenarios as a reaction to tariffs. So I'm going to synthesize the macroeconomics with the technicals hopefully will give you a map or playbook going forward for the next month or two, depending on how the tariffs play out. I had a longer presentation. I'll try and keep this short because of time constraints. Here we go. There's the front page. Hartnett U.S. Exceptionalism end is near. That's what I was referring to. We will buy our old bonds. That's an old post that I put back up there because I have a thesis. And what if the BRICS call President Trump's mighty U.S. dollar bluff? That's a post. That's pretty good. This is the Hartnett post that I'm going to be referring to. And I'm going to leave that up there while I start with the Hartnett part. Okay. This week, Michael Hartnett's observations offer two broad choices as market drivers from here regarding American exceptionalism. I think I might have this here. Oh, there you go. Let's so you can see that there. All right. In summary, tariffs reignite Trump's tariffs, right? Tariffs will reignite U.S. inflation. How much, we're not sure, but it does, right? And if that happens, that's U.S. dollar up, stocks up, bonds up, gold not down by any means. All right. Tariffs will also instigate a rest of the world recession. That would be U.S. dollar down. How would it affect us? Stocks down, U.S. bonds up, gold, I'm going to say down at first and then up. Okay. So those are the scenarios that Hartnett painted. And he goes into in detail about his recommendations are. And his recommendations in summary are, let me just put that out there for you. We forecast outperformance of bonds, international stocks, and gold in 2025 versus the U.S. exceptionalism consensus. So he believes scenario two is going to have a higher chance of happening. And he goes through the reasons for that. I may have to skip the explanations, but I have left the charts in there for that. Oh, there's the first chart. Okay, I'll read a couple more notes for you here. So going through it in rapid fire, because we want to get to Oliver's charts, because he's kind of coming to the same conclusion from a completely different discipline, and I personally love that. All right, Trump policies are inflationary domestically and deflationary globally. All right, or recessionary. Rest of the world has and will continue to lower rates to keep their goods cheap enough so we buy them despite the tariffs. So U.S. people buy them. Meanwhile, right, that's them lowering their rates. Meanwhile, Powell seemingly has raised his inflation target implicitly and will keep easing. This sets up for a simple east-west economic tug of war for the next direction of U.S. stocks and thus gold. So there are two scenarios. If the rest of the world succeeds in staving off recession, right, and we continue to buy their stuff because their currency is weak enough, well, then what does that mean? Well, everything explodes higher in inflationary boom. This is Hartnett. Bonds drop, stocks ramp, gold rallies until Powell finally puts the brakes on it all over again. Now, that's one scenario. The rest of the world is successful. The other scenario is the rest of the world fails. Now, the rest of the world fails and global recession topples all stocks, with the U.S. suffering the most because we've been outperforming for the last 3 years in a way that's just beyond the pale. All right. Bonds initially rally as stocks drop. Oh, okay. Stocks are dropping. Let's put our money into bonds for safety, right? Gold does not get hit because of the political problems. And the reaction by global banks, actually more like the Fed, is to put the pedal to the metal for even more easing. And that puts gold in charge, right? So they're going to react to it to fight off. You can't have a global recession while you are at world war. That's really what's going on now. We're fighting wars everywhere, and they don't want this recession. So as soon as everyone fails to fight off Trump's tariffs, that's even if they get implemented, right? We don't know that. Everyone's assuming they will be. Then you're going to have global central banks say, flood the market, inflation is better than recession. So this second scenario that I just spent a little more time on. This is the scenario that Michael Oliver is playing out using charts. So let's quote a little bit of an excerpt from his report. So this is me talking, I think, right? Yeah. What he's looking for in gold and silver as they relate to other markets, which are increasingly sending warning signals to him, specifically the U.S. stock market, T-bonds, and the dollar index. The last two, T-bonds and dollar index, have jolted in the directions we expected, with bonds up, dollar down, which should indicate two things. First, a likely coincident but inverse move by the U.S. stocks versus Treasury bonds, meaning U.S. stocks go down as U.S. bonds go up, which is Hartnett's second scenario. Now, I'm going to throw this in there. That's the end of American exceptionalism. See, when American exceptionalism is, simply put, dollar, bonds, and stocks all go up, right? Well, the end of U.S. exceptionalism, for whatever reason, which is it's just basically a brand, right? It just means that things are going well for us. That's all it means, right? So people start taking their money out of stocks and putting it into bonds. That's going to happen on his chart if he sees it, because, according to Hartnett, the world is failing at fighting against tariffs. Second, going back to Oliver's point, the start for the first time in a long time of asset flows out of that bubble, meaning equities in general. You can look at it as the Magnificent Seven, AI, and crypto if you like, and into the only two viable alternatives, T-bonds, viable as an alternative to stocks, but only for a while, and monetary metals. So see what Hartnett is saying. Remember, Hartnett said, we think bonds and gold will outperform stocks, U.S. stocks, in 2025. And international stocks will outperform U.S. stocks. It doesn't mean they're going up. It just means Hartnett is saying international stocks will do less worse if U.S. stocks go down. Okay, so taken together, Oliver's scenario coincides with Hartnett's situation where the rest of the world fails to stay out of recession. And in doing so, takes US stocks down, US bonds up, and gold up as the Fed must get even more aggressive fighting recession. So what the stock market does in the coming days and weeks, this part here, these are Michael's words. I forgot to put them in quotes. So what the stock market does in the coming days and weeks could well indicate the start of the major shift. Watching gold is important, but be fully aware of what the US stock market is doing in terms of producing the initial breakages, hence asset flows out, right? Okay, so I'll just paint like a little flow chart here, right? So let's pretend that Hartnett's second scenario happens, or the market starts to worry about Hartnett's second scenario, right? Because technicals happen before fundamentals. The charts start to crack the way Oliver's saying, right? Gold's going to go down with stocks initially. Trust me, it always does, right? And then bonds go up, and then gold ends up making a fish hook if there's buying out there, and I think there's buying out there. So eventually, if the world's in recession, central banks are going to have to be liquid immediately. And there's no one out there who wants to sell gold organically. And it applies to silver as well, just not initially. They'll take it down like copper in the beginning. Okay, so that plays out. And then you have a reignition phase, right? And people start pumping money to make things better. Europe would be the first example of that, I think. All right. Next. Let's close that section out with just a couple indicators on the technical side that would show these two disciplines lining up. All right. This is according to Michael Oliver. Closing this coming week on February futures, not December, at 27.11 and consider it a breakout. Closing this coming week. Okay, I must have left a word out there. If we close at 27.11 or above at the end of this week, consider it a breakout and a beginning of a rally. Whether it's these reasons or not, it's the beginning of a rally, right? Having March silver settle the week above 30.88 should indicate a closeout of downside momentum. That last part there, indicate a closeout, that's my phrase, okay, but that's Michael's number. Settling this week, again, we're talking about March futures now, right, for silver. Settling this week at 31.88 or above would similarly incredibly clear Michael's trigger level in silver. All right. Oh, boy. Running late. News analysis. Thanksgiving gold comment. Premium Hartnett U.S. exceptionalism. Premium founders personal trading recap, where I share my pros and cons of what I did during the seasonality. What if the BRICS call President Trump's mighty U.S. dollar bluff, which includes a video of Trump saying we have no gold. Okay, so that's free to everyone. And then for the founders, a new idea that I have that I'm trying to flesh out. I think the U.S. is going to refinance its deficit, getting other people to buy our bonds by tapping home equity. Lots of news. I have to skip them today, but this week it's all about unemployment, and in premium we have Deutsche Bank's CFTC, CTA flows analysis for you. All right. Checking back with the markets. I did have something prepared. Let me just give you this. All right. This buyer here, that's a person accumulating. That's not a small buyer. And I believe that's the pattern being created by a buyer such as the bullion banks that are covering shorts. And as long as we're in between these moving averages, everything I said before remains true, right? We get below here, you're bearish. We get above here, you're tentatively bullish, because we know they're still buying and they may be selling right above here. Silver. There's a couple lines you could draw in here, but I'm just drawing these here. Silver's 100-day moving average is here. As long as silver remains here, then gold's bull scenario is in play. If silver cracks here, then I would not be a buyer of dips in gold. Conversely, if gold cracks the 50-day moving average on its chart, I would not be short silver, because it will probably run from the 100 to the 50-day in a heartbeat. If gold cracks the 50-day, and the slope turns upward. I'm Vince. Have a great day.